Thinking about investing in real estate in 2017? Stay tuned to this episode of Prime Properties TV so you learn the basic fundamentals of real estate investing. Good day, Toronto. Welcome to another episode of Prime Properties TV and welcome 2017. Been waiting for you for quite some time. Hope everyone had a fantastic New Year's Eve in 2016 and that they're well and recovered, getting ready for an awesome 2017. We're starting a new series about investing in real estate, and in this series I'll be talking a lot about the basic fundamentals that are different from buying a real estate property for yourself to live in. I've been asked a lot about this topic, whether it's correct to invest now, invest later, whether it's a good idea or not. So I figured, you know what, let's make a series that educates people about all the things they're asking me anyways. Now, this video is out there for everyone who has thought about using real estate as a vehicle to retire, build a nest egg, or simply leverage your money the better way. All right, let's get started. Point number one. When you're looking for investment properties, there's three basic fundamentals that you absolutely have to look for in this order. 1, cash flow. 2, mortgage paydown. 3, appreciation. Now, in this video, I'm going to talk about specifically cash flow and why it's so important. So, what is cash flow? Cash flow is a term I'll use for short for positive cash flow property. Now what this means is at the end of the month, the amount of expenses you have is less, I say less, than the amount of rental income you get. So that means at the end of the month, you have money you put in your pocket, which means it's a good investment. Think about it this way. If you're investing something and it doesn't pay you, it may not be the best investment after all. So let me break down how cash flow works for you, okay? You have rental income. This is how much money you're collecting from your tenant, and then you subtract all the expenses. This could include mortgages, tax, insurance, condo fees, and some other miscellaneous stuff depending on what your investment property is now. And at the end of the day, after your rental income and your expenses, if you're positive cash flow and you have money in your pocket, cha-ching, this is a smart investment. Now, let me illustrate this out in a real life example that we did, okay? You bought a downtown condo, 1 bedroom, it went for $395,000, the number is over here. Your down payment, 20%, is about $68,000, and you got a mortgage at 2.15% over 30 years. I know it's a lot of numbers, but bear with me, okay? Now you collect rent for about $1,750. Your mortgage is about $1,000. So again, you subtract that. Then you subtract property taxes, $200. Then you subtract insurance, about $100. Then you subtract condo fees, about $300. And at the end of the day, approximately, you have a positive cha-ching, $150 in your pocket. Now that is a smart investment because it's paying you. It makes sense, right? Because you want cash flow positive. Just makes sense, right? If you want to test potential cash flow with the calculator I created or simply want to learn more about investment properties, feel free to contact me. My contact's in the description below. Next point. Why is it important for us to cash flow? Let me repeat this again. Because you want your investment to pay you. If your investment is not paying you and you're negative cash flow, it's not a good investment. This is from an investor's perspective, okay? Now, would you want to keep funneling money into a business that isn't paying you or making you money? Probably not. This is the exact same thing with real estate. Don't actually funnel money to something that's not going to pay you. Don't bank on appreciation. It's just not a good investment. Now, the second thing is having positive cash flow. It protects you from market swings. I'm trying not to use the word crash or bubble because it's 2017 and everyone's kind of sensitive to it already right now. But if the market does go the other way, you have rental income that is going to cover your expenses, which means that you are protected from market swings. And you're effectively building equity by having your tenant pay down your mortgage, which I'll be talking about in a later video, okay? Now, this one is the most important thing of why cash flow is the most important. You guys ever hear in the financial markets or like the newspaper, they say, oh my God, rates are going higher, they're increasing, oh my God, watch out. Well, if you have positive cash flow, you're protected from that as well. Now, at the time of filming, which is 5 days before Christmas, a lot of you guys probably heard the rates went up 0.25%. Okay, this is a 1/4%. And some of the media freaked out. But let me illustrate this using the previous example of why a cash flow positive property protects you from this, okay? Interest rates went up 0.25%. Now, because you're cash flow positive, you are still making money. You just made less money. after the increase in interest rate that went to the mortgage, you effectively just lost $40 of cash flow, which is like half the price of a phone bill in Canada anyways, which is not that much. But you've protected yourself and your investment is still rocking. Now let's take this into an extinction level event. You know, interest rates go up 1%, okay? And you go, whoa man, that's a lot, because people are freaking out about that. Now look at these numbers. Your mortgage goes to $1150, but your investment is still protected because you were cash flowing positive before. Now your cash flow now is about $10, which is not a lot, but you've survived the interest rate. That means that your investment is still rocking, okay? Now, that was the reason why having a cash flow property is very, very important. So remember, when you are looking for an investment property, make sure you crunch the numbers to see that they actually make sense. I hope that was a very insightful video for people. I know it's a completely different perspective in looking at real estate. So stay tuned. In the next few episodes, we'll be talking about mortgage paydown and appreciation. Just want to give a big shout out to Brian for giving me this nice little mug. It's been keeping my coffee warm. Thank you guys for watching. If you learned something from this video or simply enjoyed watching it, make sure you subscribe to PrimePropertiesTO over here and continue educating yourself in real estate. If you have any questions or any comments, you can leave them in the comment section below, or feel free to contact me. I'll do my best to answer their emails. And remember, make sure you share this with your family and friends, because an educated consumer is the best consumer. Stay warm, Toronto. I'll see you next episode.